Hey guys, it is Pila here. It's Monday today. I hope you guys are doing better than next last week. I believe that you guys are going to do better than last week. All right. Today we're going to talk about the market structure. One of our subscribers requested that we check. We talk about the market structure, of which is something that is important. It will help a lot of people. So let's focus on the market structure, of which is what you need for you to get the direction of the market. So if you will master the market structure in the beginning, and then you will be good to approach the market the right way, or else you will find good opportunities that are corresponding with the direction of the market. All right. Look for support and resistance first. Remember, we always start from higher time frame. You don't make that mistake to go to smaller time frame. We're just gonna do it like this, and then let's focus on the market structure then. Now, the market is coming from the support, the resistance, it is going down. It will go up, it will come down toward to test the support. And then it will go higher. As soon as the market goes higher, what is our expectation? Our expectation is that the market breaks above. Once the market breaks above this, now we know that, okay, we have changed our direction. The market is no longer going down. This is here we have our lower high. Now, once they break the lower high, we know that we are no longer pushing the market to the upside. Remember, as the market was going down, they created lower low here, right? And then here is your lower low again. And again, guys, if you are new in the you are new or you see my YouTube channel for the first time, please do not forget to like and subscribe and also share this video. I believe that it will help many people. Now, our expectations, let me change the color and make it red. Our expectations, remember, this is our support. All right. This is our support from daily chart going up. We know that, okay, the market's supposed to respect this. This might look like a resistance, right, on smaller time frame. Should the market break and go up, now we know that, oh, okay, the market has changed the direction. You go to smaller time frame, that's a breaker structure, but we're not gonna go deeper on that. What I want us to do is to focus on the structure of the market, right? The market will then later on come back to the same level, or else not even back to the same level. It might go down a little bit before shooting up. Already, as soon as the market goes down here, from here, now we know that, oh, the market is going where? It is going up. Forget about this downtrend. This is not a downtrend. The market is just doing a pullback. So now the market just changed the direction. So as soon as the market changed the direction, it will create, this is your high, right? The market was doing lower highs as the market was going down, it was doing lower lows. Now the market created a new high. Now you come below, what is it you're going to get? You're going to get a higher low now. The market goes higher, as you can see there. Now, let me try to erase. Let's make sure that our chart is always clean so that whatever that we are doing, it is visible. Now, our expectation is that the market must come back to this and respect the resistance, right? But at the same time, this is your high. The market just created a new higher high. So when you open your chart, let's say the question was, let me try to recall the question. Actually, I was supposed to be reading the question here so that you guys can understand ukuthi le video siyenza based on what. So here for us to understand what is happening, we need to know that the market is coming from which direction and it is headed to which direction so that we can look for good opportunities. All right. So let me look for the comment here. Just 1 minute. I'll get it now. I'll get it now. Okay, I don't get it. I don't know why. Let me do it like this. I'm gonna get it. Okay, I got it. The question said, thank you. The market did go up, even though based on the analysis we did on the M15, of which is 15 minutes time frame, we were expecting sales. Could you please go through why it possibly changed direction and bought? Okay, that was the question. No problem. I will also go to that pair and check what happened. Let's talk about the market structure then. Now, the market creates a new higher high. As the market creates a new higher higher, what is our expectation? That the market comes back, right? As soon as the market comes back here, we are looking for what? We are looking for opportunities to do what? To step in and buy here. The market later on, it continues with the uptrend. So when you analyze on a higher time frame, you open your chart, you realize that the market is roughly here. What do? You don't do anything. Wait for the market to come back here so that you can take the direction of the market. Do not go against the direction of the market, because of as soon as you go against the direction of the market, you'll come across difficulties. You'll come across challenges that you're supposed to be or you'll come across challenges that you are supposed to be preventing them. Or yeah, let me put it this way. You'll come across difficulties, and what I want you to master is that you open your chart, you check the support and the resistance from higher time frame. You realize that the market is coming from the support. You know that the market is going for the resistance. Simple as APC. And then you look at the market structure, you check where the market is on a higher time frame, and then you go to smaller time frame, such as a daily, 4 hour, going down to 1 hour time frame to check where the market is. Up until you reach that smaller time frame, then that's when you know that, oh, okay, from here, now I must look for something different. What do I mean by that? Remember, the market is going up. You go to smaller time frame, the market is going down on smaller time frame. That doesn't mean that the market is selling. You go to smaller time frame, you look for something different where the market's going to turn. Let the market go down, you look for buy opportunities. Remember, this down move is going to be short. This one's going to be a huge move. Forget about this. Forget about this. And at some point, if you come across things like this, you need to be careful, because of you'll focus on the breaker structure. Let me use black. Before black, let me try to erase. You will look at the market structure and believe that the market is no longer going up. We are going down. Looking at the market structure, yeah, the market is coming down. You'll expect the market to respect the breaker structure and expect the market to go high. Check below. Yeah, something like this. The market can come to the trend line and go up and create a new higher high. It comes back down, it goes higher, it comes back. We change the direction. Now we are pushing to the different direction. This is what you will see over and over and over again. Let's make an example of this good chart later. Let me erase. All right. Right now we are on daily chart. We are on daily chart. Let's check. Let's check what happened there. Let's check what happened. This is daily chart. We want to understand that where is the market coming from, right? From daily chart. You check from your left-hand side. You see that, oh, there's a support there. On that support, what else do you see? Take your trend line, push it all the way up now. Not that one. Push it all the way up. Now, you cannot see almost everything that happened here on this time frame, but you can see the first time touch of the trend line and the second time touch of the trend line there, and the third touch of the trend line as well. And then here you can see the support where the market actually turned on the right-hand side. If you apply the line chart, this is where the market actually turned. Your support here, your support there. Breaker structure, Hence, you can see two touches. And then there's a trend line as well that is pushing the market up. Now we know what is happening on this pair. We know what to do from higher time frame. We then erase everything. Now we know the direction of the market from higher time frame. We then jump to 4-hour chart. On 4-hour chart, what is it that we want to see? We want to see the market structure. We want to see what is happening on that time frame. Now you see that the market gave us, this is the second time touch of the trend line. The market went up, it came back down. If you look at what they did there, let me show you like this. The market went down, it went up, it went down. Now, you check, this is your lower low, this is your lower low, this is your lower high. It was broken. The market went higher. It came back again to create what? A new trend. The market then went up. This is where we are looking for our entries. At the same time, the market gave us a higher here. The market went up. It gave us a higher high. At your horizontal line, I said when we trade support and resistance, we focus on two touches. We have two touches there. The market came back down to the break of structure that happened here. This is your continuation pattern. The higher the chance the market will go up. Remember, the market is giving us a new direction, right? Now you have your higher here. The market is giving you another higher high. Now, since when you have that higher, what else are you looking for? You want to check where the market's going to turn again. You look for buy opportunities. I will erase and just add something that will give you the light. There was a trend line that was broken. You don't have to approach the market blindly. You must check almost everything that happened so that you can be at least safe. Now you know that, oh, okay, there was a trend line there that was broken. It has the first time touch and the second time touch. There's a trend line that has two touches. It was broken. The higher the chance that the market's going to change the direction there. Look at the market structure. The market is creating higher highs. The market is creating higher highs. It can go down a little bit. It will continue to the upside, creating what? Higher highs. Always rely on your left-hand side. So in this situation, whatever you're going to be doing, make sure that you rely on your left-hand side. Make sure that you pay attention to what happened previously. Do not make the mistake of going to smaller time frame and look for a different direction. Whenever we are here on this time frame, make sure that you check almost everything and prepare. Remember, this higher time frame will show you the exact thing that's going to happen, right? But if you're going to go to smaller time frame, that is when you'll start seeing different things. Can you imagine? So let's move on. And then I want us to visit the V15 a little bit to check what happened. Hence, the market went up instead of going down. So we're going to visit the V15 to see what happened or what caused the market to go up instead of going down. Always remember, guys, whatever that you do in the market, make sure that you look for opportunities that are corresponding with the direction of the market. Do not go for things that are not corresponding with the direction of the market. Let me see. Okay, no problem. Let's go for V15. Was it 151S or 15? Let me verify if it was 151S. Oh yeah, it was 151S. Volatility 151S. We were expecting a sell. Let's go to 4-hour and check what happened. Okay, the market was supposed to come down. The market was supposed to come down from the resistance. The market was supposed to push to the downside, maybe from this break of structure before going up. But what happened is that the market just went up. As soon as the market goes up, what do? You wait. Let's check the left-hand side to see what is it we have. On our left-hand side right now, we don't have much information that we can use. Let me see higher. Let me see higher. This is another sign that shows that the market is still going to push up. You see here, this is your breaker structure. The breaker structure is matching with the trend line that you have on a higher time frame. You see that there's a trend line that is the first time there, second time there, and the resistance at the same time. So the market went up, it closed above. But if you check on daily, they're trying to respect the trend line, but they failed. They closed above. Now we want to see where the market's going to close. If the market closed above the trend line, that's another sign that the trend line, the market failed to go down. The market went up. So what is it that you're supposed to be doing there? We're supposed to be looking for buy opportunities. So we will move with the time frame to get something that is accurate. You see right now, this is your resistance level. It was broken. They left a continuation pattern here. They came back for the continuation pattern. So we want to see what is happening there, but we need to go through all the time frames to get something that we need. Again, if you made it this far, please do not forget to like and subscribe, and also leave a comment of what is it that you want me to do. Now you see that again, onto our years, your visible continuation pattern, the market went up, it came back to the continuation pattern. The market tried to go up, it came back down. We don't know what happened there. But if we break above, we're going to have what day? We're going to have a resistance onto our. This is your minor support and resistance. So let's go down to 1 hour to see what happened on 1 hour chart. On 1 hour chart, let's see what is it we have. Okay, that's the cause. The market went up a little bit. Let's see what else we have that confirms that we're going to push the market higher. There's a trend line for us confirming that we're going to push the market higher. Let me check on 30 minutes. Yeah, the trend line confirms that we're going to push the market high. Let's verify this one. This one doesn't look valid, but it is, as much as they penetrated a little bit. So this is what actually happened. So in most cases, if let's say for an example, we're expecting the market to go up from this trend line, that the current trend line, it happens that the market goes down. These things are happening. You will take a loss here, wait for the market to come back and test so that you can sell and go down with the market. Don't run after the market. You'll find yourself losing. You'll jump in here and the market was planning to reverse. You will find yourself losing, where else you're supposed to wait for the market to come back and test the broken trend line so that we can sell. That's what you do for you to become profitable. So whatever that you do, guys, do not forget to start from higher time frame. Do not forget to check the direction of the market first. Check the direction of the market, or before checking the direction, look at the market where it is coming from. That's the key. Check whether the market is coming from the support or the market is coming from the resistance. Once you get these two, then you check the strike, actually, you'll just get the direction of the market after checking where the market is coming from. Once you realize that the market is coming from the resistance, you'll know that the market is going down. And then you go to a different time frame to look at the market structure. You check where the market is right now, and then you'll know where to enter based on the direction of the market. That's what you do. All right. Do not forget to like and subscribe, guys. Catch you on another video.